Most traders spend years searching for the perfect scalping strategy. But what if the answer was hidden in just two simple indicators? I took the EMA and VWAP filter, tested it on 1,000 Bitcoin trades, and the results were completely unexpected. In this video, I'm going to show you exactly how this strategy works. Bitcoin is one of the most challenging markets for scalpers. The price moves fast, fake breakouts happen constantly, and many traders enter positions based only on emotions or random signals. That's why professional traders often look for confirmation before entering a trade. The idea behind this strategy is simple. Use EMA to identify the short-term trend. Use VWAP to understand the average price where most market activity is happening. Instead of blindly buying every breakout or selling every drop, we wait for these two indicators to agree. The goal is not to predict every move. The goal is to increase the probability of entering trades with momentum on our side. Here are the exact rules. For this test, we use a fast EMA to track short-term momentum and VWAP as our market direction filter. A long trade setup happens when price is above VWAP. The EMA is also showing bullish momentum. The price pulls back toward the EMA instead of chasing a huge move. When buyers step back in and price continues upward, we enter the trade. For short trades, we simply reverse the logic. Price must be below VWAP. EMA must confirm bearish momentum. A pullback toward the EMA creates the entry opportunity. The important idea is patience. Many traders lose money because they enter too early. They see movement and immediately jump in. This strategy forces you to wait for confirmation. Before we continue with the test results, if you enjoy real trading experiments like this, make sure to subscribe because I'm testing more strategies with real data and breaking down what actually works and what doesn't. Now let's take a look at a real example and see how this strategy decides whether to enter a trade or stay out. Here we have the Bitcoin chart. The first thing we check is the overall market direction. Price is trading above VWAP, which tells us that buyers are currently controlling the average market price. But we don't enter immediately. The EMA also needs to confirm the momentum. As we can see, the EMA is moving upward and price is respecting this dynamic support area. Now we wait for the most important part, the pullback. Instead of chasing a large green candle, we wait for Bitcoin to come back toward the EMA. This gives us a better entry location and reduces the risk of buying at the top of a short-term move. At this point, we have three confirmations. First, price is above VWAP. Second, EMA confirms bullish momentum. Third, the pullback holds and buyers step back into the market. Now we have a valid long setup. The entry is placed here. The stop loss goes below the recent structure, where our trading idea would be invalidated, and the target is based on our risk-to-reward plan. But remember, the goal is not to win every single trade. The goal is to repeat the same process over hundreds of trades and let probability work in our favor. Now let's look at another example where the setup fails, because understanding losing trades is just as important as understanding winning trades. Now let's look at another Bitcoin setup and see why this strategy decides to stay away from a trade. At first glance, this chart might look like a perfect opportunity. Price is moving quickly, and many traders would probably jump in because they don't want to miss the move. But this is exactly where the EMA plus VWAP filter becomes useful. The first thing we check is VWAP here. Price is moving around the VWAP line instead of staying clearly above or below it. That tells us the market does not have a strong direction yet. The second confirmation comes from the EMA. The EMA is flat, which means momentum is weak. Even though we see short-term price movement, there is no strong buying or selling pressure behind it. This is a situation where many scalpers get trapped. They enter because of excitement, but the market has no clear advantage for either side. So according to our rules, this is not a trade. We simply wait. A few candles later, the market shows why patience matters. The price moves back and creates a fake breakout, trapping traders who entered too early. By following the strategy rules, we avoided a low-quality setup. And this is one of the biggest advantages of using filters. A good strategy is not only about finding opportunities. Sometimes the best trade is the one you don't take. Professional traders understand that staying out of bad situations is also a skill. Now let's analyze another Bitcoin trade example. But this time we are going to focus on something many traders ignore: capital management. because even the best strategy in the world can fail if you risk too much on a single trade. Here is the setup. Bitcoin is trading above VWAP, showing that the average market price is supporting the buyers. The EMA is also moving upward, confirming that short-term momentum is still positive. But before entering this trade, we don't ask only one question. Is this a good setup? We also ask, how much should I risk on this setup? This is where professional risk management starts. Let's say the account size is $10,000. A disciplined trader does not randomly choose a position size. Instead, they decide the maximum amount they are willing to lose before entering the trade. For example, with a 1% risk rule, the maximum loss is $100. Now, the stop-loss distance determines the position size. If the stop-loss is wider, the position size becomes smaller. If the stop-loss is tighter, the position size can be larger. The mistake many beginners make is doing the opposite. They choose a large position first, then place the stop-loss wherever it feels comfortable. Professional traders do it backwards. First define the risk, then calculate the position size, then enter the trade. Now let's continue with this setup. After entering, Bitcoin moves in our expected direction. But instead of becoming emotional and holding the trade without a plan, we manage the position. Once price reaches a certain profit level, one advanced technique is protecting the trade by reducing risk. For example, after the market moves strongly in our favor, we can consider moving the stop-loss closer to the entry point. This does not guarantee a winning trade, but it helps protect capital and reduces the impact of unexpected reversals. Now here is an advanced lesson. The best traders don't focus on maximizing every single winning trade. They focus on surviving long enough to take the next opportunity. A trader who protects their capital can continue trading tomorrow. A trader who ignores risk can lose their ability to participate in the market. Another important point is avoiding overtrading. Even if the EMA plus VWAP setup works well, not every market condition is suitable. If volatility is extremely low, or price keeps crossing VWAP without direction, the correct decision may be doing nothing. Remember, your capital is your most valuable tool. The goal of a professional trader is not to be in the market all the time. The goal is to be ready when the highest quality opportunity appears. Before we finish, here is one advanced tip that can improve your EMA plus VWAP scalping results. Never judge a setup only by the entry signal. The best traders also analyze the location of the trade. A long setup near a strong support area with VWAP alignment has much higher quality than the same signal appearing in the middle of nowhere. Remember, the indicator gives you the opportunity. If you enjoyed this strategy test and want to see more real trading experiments, make sure to subscribe. And comment below, which strategy should we test next? I'll see you in the next one.